Hey guys, welcome to another video. Today's video is going to be part of a new segment that we're looking into. It's going to be called Market Talks, and in this segment, we're going to talk about what happens in the market every single day and what caused the moves in the market. So today, the market was really red, not really red, but pretty red, and you can look at why it was red if you look at the 5 minute time frame. So we woke up today and we gapped down. We had a gap down. Let's see if we zoom in. If we zoom in, we gap down from here all the way here. We try to go up in terms of like the first few candles. We try to go up, but just not the day for bulls. We broke this level. I'll zoom out. We'll see the level. But more importantly, I would like to look at these two candles right here. This is when volume kicked up. You see we had a large red candle here and two large red candles here. So what happened here? So today at 12 o'clock, Bullard, which is a Fed speaker, started speaking on recession, and in his eyes, he's basically one of the proponents of having rate hikes being extended for a long time into 2024, 2023, and the market did not like that news. Basically, rate hikes means that recession is still around the corner, and he does not think that with the amount of rate hikes that we've had in the last few months, that it's enough to cover for the recession. Basically, he still thinks that recession, it can be avoided, but it would need more rate hikes. And the market did not like that news, so we tried to go up, and then we had him talk at 12 o'clock. And after 12 o'clock, it was basically just bloodshed. People did not like the news of recession still hanging around, especially since that headline has been pushed so much since the beginning of the year. And it kind of looks like we were kind of fading away from that headline with this rally that we had recently. What this exactly means for the market, if we zoom out. So this is SPX, which is just a S&P 500 index. So if you look since January, we've been kind of forming a head and shoulders where we had a high met by a low, met by a lower high and a lower low, lower high, lower low. This looks to be another lower high. However, my bet would be that this isn't a lower high. I would assume that right here we were met with a lot of support. And why do I say this? Okay, so every single time that we've had a lower low, we've had a lower high followed by some consolidation, and then a little bit of a new lower low met by even more lower low. So this, I wouldn't consider this the second shoulder, but this would be the second shoulder, if that makes sense. So this little consolidation area was met by even more lower lows. So if we look here and here, we have consolidation, and they're significantly far from each other. But if we look here and here, where we have consolidation, they're pretty close together. It seems like the market has tested this region. If you make a box, right, from here, if you make this box, hold on, I know I can make a box. How do I make a box? It's fine. Okay, we'll just make a box. If you look at this region right here, and we just draw it from here. It's a really messy box, but it's fine. This box right here, let's just ignore everything else except this box, okay? We can make this box a different color too. We can make it bright green. Not exactly the green I was looking for, but it's fine. If you look at the green right here, stocks have had a very hard time breaking this little green box. Let's just delete these purple lines. I'll add them later. Stocks have had a really hard time. Let me get rid of everything else. Stocks have had a really hard time breaking this box right here. We tried to break it and then immediately got met by insane green on a singular day. This was one day. Insanely green. And we had a gap up day off of green CPI. This was green CPI day, where the market moved. I think record-breaking numbers. The market moved. So what do I think about this red day? Let me undo everything. Let's undo the box now that we've seen the box. What do I think is going to happen? All right, so I think that we're going to test this blue trend line. We can get rid of the smaller one. The smaller one broke and we saw near lows. That's exactly what we're looking for. So we're going to follow this trend line right here, this blue trend line. And we're going to probably bounce off of it tomorrow. We're going to see a little bit of a retracement. And then we're going to probably break and make a newer high. And then we're going to have to wait for the 30th to see what Jerome Powell says. Jerome Powell is the head of the Fed. And if he says that the market is looking good to continue on a bullish trend because he thinks that the current rate hikes are enough, then we can go back up towards maybe the 440 levels on SPY, maybe even 300s on QQQ. If you look at the 1 week chart on SPX, it shows even more bullishness. If you look at the candles, these red candles are basically nothing compared to the volume of these green candles. These green candles have been absurd recently. We had quite a bit of a drop here. This was, I think, September. Yeah, September. And then we had a rebounding, quite a bit of a rebounding. And I think this rebounding continues. If this trend line does break, however, I would look to play shorts. We can follow the bigger trend line of this yellow line all the way down up until where we had that box earlier, where we had the box here, right here. You see this low right here? That would be where I would stop going short until we have even more news for us to continue going short. Other than that, the market is looking really good to continue being bullish. I would buy all the dips that you could right now. This is just my opinion. You can do whatever you want to do, but in my eyes, the market seems to have found a relatively nice bottom with a very good time frame for us to continue being bullish again. I would say heading into 2023, we'll probably have a little bit more of a recession to go, but I don't think we make new lows. I think the bottom has been set in, and Jerome Powell, with midterms coming around, I don't think he wants to have recession headlines be the thing that sets him out of office. And yeah, I think that the runway is clear for us to go back up again. So yeah, remember guys, when you trade on a higher time frame. It becomes way easier to see these trends. If you traded on a 1 hour time frame every day, it's way easier than trading a 5 minute or a 1 minute time frame. Because if you trade a 1 minute time frame, look, when I zoom out, this 1 minute time frame looks like nothing, right? It looks like nothing. It looks like, oh yeah, we're stuck between this little zone right here. But when I change it up to the 1 hour time frame, you guys can see, oh look, this trend line has been continuing. And if you even go to the 1 day trend line, you get the point. So remember guys, the best piece of advice I can give you guys is increase the time frame these days. The market is not friendly right now, and newer traders are getting burned every day. And the best thing I can say is increase your timeline. And yeah, if you guys like the new segment, you guys already know what to do. Drop a subscribe, drop a like, anything helps. And I'll see you guys in the next video. If you guys are interested, there is a Discord link and a few other links, my social links in the community tab in my About Me also. So if you guys want to check those out, we have a free trading Discord you guys can join. It's really active. It's relatively new, but we're getting new members every single day. So if you guys want to join that, feel free to, and I'll see you guys next time.